from Rolfes today, because we saw turnover at Rolfes increasing by 26%. Overall headline earnings per share coming in today at 39.2 cents per share. So that slightly up by around 8%. And of course, we've got the CEO of Rolfes standing by with me right now. It's Gerhard van der Merwe. Gerhard, thanks so much for joining us today. So let's take a look at your biggest division, because you've kind of reclassified all your divisions. So I suppose it's hard to compare one year against the other, but this is your most important division, the industrial chemicals division. Turnover there, 503 million rand. So that's 2/3 of turnover. Whilst the turnover was up, you've got overall operating profits down by a quarter. So take us through the operating environment and why we saw a pullback in profits there.
The industrial division is our biggest by turnover, but by far not if you look at the operating profit level, where I think our agricultural chemicals division is probably the biggest, was the biggest for the year. The industrial environment this year in South Africa was tough. We've had strikes, we've had shortage of materials, we've had manufacturers just cutting back. If you look at the division, our primary clientele is manufacturers, and yeah, it's been a tough year. We haven't lost business, but we've seen a reduction in volumes and definitely a reduction in margins.
What is interesting in this specific division is you're increasing manufacturing capacity in certain aspects. So that, of course, means you see growth opportunities. Tell us about that specific strategy.
Yeah, I think what we've tried to do is to manufacture more products for exports. We have unique products. We've made some very good inroads into Western Europe on some of our specialized pigments, and the plans is to increase capacity for that. But that will all be exports. We don't foresee major growth in the local market in the next year or two, but we do see a lot of growth coming out of our exports. And also our African business, which is also in the division on the industrial products, has had some very good growth in this year, albeit from a small full base.
I mean, you really do highlight the fact that the export market is growing for you. It now represents around 16% of your turnover. So specific mention made, in many parts of your results today. Does that mean that, South Africa is ex-growth? I mean, how do you view also the mixture that you want to have between South African and international business going forward?
I think long term, our view is that we definitely want to have at least a 50-50 split in our business. We manufacture locally very good products that works well globally, products that we can compete with globally, and we want to capitalize on that. I
mean, it's great to know that we have manufacturers here that are competing on a global scale, because there's a lot of doom and gloom if you look at a broad scale around manufacturing.
Yeah, no, we're definitely optimistic about that, especially on our agricultural chemicals as well. So for us, that's a big focus. We have good factories, good IP, good people, and we must just export more. The local market, definitely on the industrial side, is flat. Africa is not flat. Africa is growing fast, and agricultural chemicals is also believed to be good in the future.
And of course, as you say, a very important part of the overall bottom line for you right now. What about water and water purification, water treatment, given the acquisition of PWN? I mean, is this going to be a big growth market for you? What type of speciality do you have in this specific area?
Has to be a big growth. I mean, you just think about water and water scarce and water availability in the continent and in the world. PWN was one of the smaller players. It is a niche player. If you look at our acquisition strategy, it's been to buy smaller niche players, and we're going to use our existing infrastructure to grow them into Africa. So for us, that's obviously a big focus, as with our agri side, to take those products into Africa.
What do you need for that business to be successful, apart from the fact that you've got kind of a smaller player bolted on to the company? I mean, what more do you need for that to be an important part of the business going forward?
Bigger network, more people. I mean, we have the formulas. It works on big clients in South Africa, so there's no reason why we can't roll it out into Africa. So it's just more resources into various countries.
When you're talking about competing on the African continent, I mean, you're talking about water, you're talking about agriculture. These are certainly not new areas of growth that we're talking about. But tell us about the competitive landscape for a chemicals company like yourself, for a manufacturer like yourself based in South Africa.
Africa is becoming very competitive, although we still see that we could realize good margin, good profits out of Africa. And also, if you look at our group, we are very much into specialized chemicals. We're not into the big volume game where a lot of the multinationals play. So we stay clear of that. We try to focus on the specialized products in all our product groups, and that's where our focus is going to be. We see a lot of opportunity for us in Africa. We have a very successful operation in Zambia that covers the central. We've started operations in Nigeria, which we believe is going to be good for us going forward. We're looking at Ghana, Cameroon, We also look at East Africa, but East Africa is very competitive. So we're focusing more on Central and on the West.
So what's your strategy? I mean, do you send South African resources, if you can call them people, to be based in Africa? Do you find local partners? I mean, what type of strategy are you using to have more of an African-wide presence?
It's both. We try to identify local partners, suitable ones. We like to put our own man in there, but it's a distribution network for us in Africa. Depends on the volumes. If it grows with time, then we have to look at investing in this in terms of facilities. Right now, we get capacity down here to manufacture for exports into Africa.
Now, one of the aspects, I suppose, of a company like yourself is very much focused on the R&D space, and you know, looking at innovations really. So, how are you spending in this space? I mean, how much overall are you spending on R&D, and how do you see yourself positioned when it comes to new technology and IP?
What we've done up until now is to develop R&D in conjunction with partners. Partners like Longyou, which is the biggest organic pigment manufacturer in the world, is our local partner on certain specific pigments. On the agri side, we have partnered with a couple of universities to develop new products. And on the water side, we have existing technology. So we don't try to do it ourselves. We don't have the capacity, the resources to be a BASF at this stage. What we've done is to partner with universities, international partners, and develop joint IP for distribution, manufacturing distribution.